Okay, good morning, everybody. Welcome to a frostbitten morning in New York City. If you guys haven't figured it out yet, I absolutely hate cold weather. I was probably I was probably born to live in San Diego. I think I don't know if I could live across the country from my family, but I'm definitely I'm already counting the days till spring training starts. Even though the Mets are going to stink again this year, I am not a cold weather person. No, Idaho probably not either. Exactly, exactly. Although I wouldn't mind exchanging the cost of living from a different part of the country and taking my trading income somewhere else. That would be nice. Oh man. So yeah, Mike, I actually took it home based on ExxonMobil and COP kept getting weak during the day yesterday, and all of them were pretty much uh, rolling over except for this one. And this one was at a really big resistance level, this 110 level. It actually pushed through it yesterday, and I felt like the risk was worth the reward because the other two broke down. They were a little bit weaker during the day. Um, and the 110 level was a really, really big resistance. So I figured one or two things were going to happen. I was going to take a reasonable loss on it, or the resistance would hold yesterday's buying pressure, which in my opinion for the first day of the year was just a little bit overdone. So you saw I only traded. This is really the only position I was in the entire day yesterday. Like we talked about pre-market, I just didn't feel like I think all of you felt really. We discussed it a little bit yesterday morning that there really just weren't enough clean charts to have a really solid opinion. So a lot of stocks gapped up higher, kept going in the first half hour, and then didn't get really clean follow through. So it was really more the thought process of a few of the other stocks have already shown some weakness intraday. This stock was coming up to really big resistance, so I had a really solid technical level to lean on. Although in the morning we did recognize the sector as one of the stronger. Once they got a little bit weaker midday, it was really just a question of all right, I have a reasonable level in mind, and if it holds that level, I'm okay with it. If not, I'll take a small loss, and I'll be okay with that too. So I don't have any size. It was really more an initial feeler. I will start to add to it if yesterday's high holds up as a decent resistance level, and on the 5 minute charts, I see some sort of push down and pause, looking for some intraday follow through to the downside, looking to maybe even refill the gap. If it does, that'll be the game plan. If it doesn't, I'll just take the loss and move on to the next idea. Yeah, Derek, I did too. And I think we all felt that in the morning, which is actually pretty good because if a lot of us were seeing the same thing, it means that we're doing a good job of we're doing a good job of identifying how we quantify an edge. So if a lot of people are saying I can't find anything or I can't find anything I could trade with conviction, I think that's good. I think that's very good. It can be frustrating because you want to trade, but it's good that you're recognizing that you don't have clean, so to speak, setups. I actually do think some of the weaker stocks coming into yesterday that had a decent push to the upside today are probably setting up as some pretty good sell shorts today. And I think specifically ABX and GG, they were really, really weak. And what's actually really pissing me off is we had GG last week as a long, and now you look. We talked yesterday morning about holding some of the trades for a couple of days, and it was good for $3.50 off of the low. So just one trade, $3.50 in basically 2.5 days. So we got to we'll focus a little bit more on. I guess we'll call it intraday position trading and maybe holding 1 to 3 days as opposed to where do we believe the next 5 minute move is going to be. And a good way to think about that is to start getting into the mode of where do I think the stock is going to close versus where do I think the stock is going to be in the next half hour. And we'll take a lot of the stress out of the 5 minute wicks and jiggles and and all of that all over the place. So yeah, Pauline, that's it's absolutely something that should be in your mind. And yesterday's gap, really, quite frankly, is a good example of that. A lot of stocks were inside days to week, and then we have this monster move to the upside. So I think on good ideas, the thought process should be to work a really good idea, whether it's a saturation play or an analytical time frame, and only if you have a really good head start on a trade or a really solid support or resistance level. Only under those circumstances should you be looking to hold on to those overnights with the right circumstance. But you know what though? Um, at some point, you have to say to yourself, this stock, this sector, or maybe even the broad market is pretty clean right now, and you can't really be worrying about what might happen other than planning for what might happen. It's like I've actually had somebody ask me once, how do you plan for unannounced, for how the hell did they word it? How do you plan for news that wasn't expected to be announced? I looked at the person. I think they asked me at an expo or something like that. I'm like, you want me to tell you how to plan for news that nobody knows is going to be announced? It's just there's only so many contingencies that you can plan for, and you absolutely want to plan for as many as possible and manage your risk. Um, but if you want to, yeah, exactly, crystal ball, one of those magic 8 balls. Remember those things you shake up, and what was the answer? It is decidedly so. I think that we should really start to work on if and when holding a little bit more than just for the next momentum move, so to speak, to the upside or downside makes sense. And I think that one thing to keep in mind, though, is to think about doing that. It will probably mean reducing your share size a little bit. And I'm not talking about less than 100 shares. I've had a couple of people tell me they're trading odd lots of 50 shares. I don't really think that's necessary. But let's say, for example, you see a stock that you want to be short, and you see the stock clearly makes a lower high. Let's say, for example, you make a high, and then the next pattern on the 5-minute chart clearly makes a lower pivot high, or a big topping tail that's a lower topping tail from the previous high. Start working the short sale with the intention that the high of the day and a break of the high of the day is going to be the stop loss, and you're looking to hold to the close as opposed to watching every print and bid and offer and going crazy. And when the circumstances dictate that you've really nailed a good idea and you start to do that a little bit more, it's actually one of my goals this year where I want to expand my time frame a little bit more. Um, if you do the right thing and work the orders as opposed to just saying I'm going to hold every trade overnight, if the circumstances are right, you should have a pretty good feel for when you should do it. So maybe we can make that a part of our talk throughout the day, or maybe even make a separate blog post for it. Where we'll talk about, what do you think? Is this a potential idea? That kind of thing. Does it warrant it? And obviously, the higher probability ideas are the ones you want to do that with. But that's a skill too. It's not a math equation. If it was a math equation, we'd all just write back testing formulas and say, okay, every time this happens, print me money. There is a certain skill, there's a certain skill to which stocks are great longs, which stocks are great shorts, and what a saturation play actually looks like, and all of that kind of stuff. So um, it's exciting that uh, you have a lot to learn still, and we all do. And that's really what attracts us to trading, I think, is the fact that it's not boring, and there's always something to learn. I think that's one of the biggest draws that trading brought to me, because like 20 years ago, my family had the deli, and remember that old Dunkin' Donuts commercial? Which, by the way, Dunkin' Donuts is up 14% this morning. That old Dunkin' Donuts commercial with the guy, time to make the donuts, time to make. I mean, owning that store literally was like that. It literally was like that. It was so freaking boring. But you know what? It was boring, but um, it forced me to say I don't want to do this the rest of my life. And that's the difference with trading. Trading is still running a business, but it's exciting every day and it's challenging every day. That's what makes it so unique, in that if you really treat it like running a business and you really can get out of your head and look at the paper of the business plan you wrote, it's exciting because even though it's the same thing every day, it's not the same pursuit every day, which is what makes it really, really fascinating in my opinion. Because it's like what Mike typed in there about breaking the rules, the 2012 convictions. Shame on you. Shame on you. I mean, you know exactly what you're supposed to work on. That challenging aspect is what makes the business so exciting, because it's not you against the market. It's you against you. I'm telling you right now, everybody could learn the technicals in a week. This is the reason the mentoring program is so valuable, is going through days, weeks, and months together to the point where we can be friends. And I can tell you, hey, bonehead, which I'm not saying, Mike, don't take that, is, we can get to the point where you understand we're yelling at each other or encouraging each other or however you want to word it. Everybody has different motivational buttons to get to the point where you finally sit down and you're like, this doesn't work. I have to stop doing this. And I'm telling you, I told you guys this the first day we started working together. The first thing you have to do is work on a big list of what doesn't work. Everybody wants to go to the entry signal. How do I make money? You got to learn how to not lose money first. Make a big list of what doesn't work, and then do a lot less of what doesn't work, and then flip 500 hamburgers this month, and that's how you make money. And I mean, Mike just typed it in, but it's the bottom line is if you could minimize mistakes, you're going to be in the game long enough to earn money. And you eventually got to get to the point where you're pissed off and say, I want to do this, that doesn't work, and I have to discipline myself. And if you can't do it after months and months and months, and you continue to say excuse after excuse after excuse, you know what? Go find a job. Because trading is an entrepreneurial venture. And you have to learn what doesn't work, do a lot less, minimize mistakes, and then be involved long enough so that when the market does unfold perfectly for a week, according to your plan, you make your paycheck for the month in that 1 week. You know? And again, Gordon, yes, it's something people have to acknowledge. If as an individual, whatever age, whatever the reason, if you want to say it's because of your age, if you want to say it's because, whatever reason, your mom didn't love you, your third grade teacher was mean to you, whatever. If you're carrying around something for years and you feel like it's translating into I don't have whatever, you have to make a decision. If you keep making excuses, trading's not for you. Because I'm going to tell you right now, you're going to be excusing yourself into the next 4 years. And look, I'm not here to sugarcoat it. You have to learn what not to do, minimize mistakes, and when the market unfolds well, according to your plan, you earn money. And and believe me, look, I'm about as big of a student of personal achievement as anybody you will ever meet, and I will tell you this flat out. If you're constantly talking to yourself, telling yourself that it's there's always a reason outside of yourself, you're never going to succeed. I'm telling you, and I'm sorry if that's a little cold for first thing in the morning, but I'm very acutely aware of when somebody's emailing me and all the things that they're telling me or in their body language, everything is outside of themselves. You have no chance of succeeding. If there's some baggage you're holding, if there's you want to hold on to, I got divorced 7 years ago and I haven't recovered, and that's why I didn't take the loss, and I'm still mad at my wife from 22 years ago or my husband, and that's why I went through my stop loss by 2 points or whatever. You got to get over that. You got to be positively talking to yourself all the time, but more importantly, it's not so much about the power of positive thinking. It's about paying attention to what's working and what's not working. And which is why I am anal about writing observations during the day. You have to keep writing down what's working, what's not working, what you observed, something you didn't notice before, so you make a big list of what's not getting you where you want to be. And then the list of what will get you to where you want to be is not even half the size of the mistakes. And that's ultimately what's going to be your trading plan. So if you catch yourself constantly making excuses, and again, Mike, Gordon, you guys just happen to type it in there, and I'm not saying this is you, so don't tell. I'm just like throwing out in general as what it takes to succeed. You have to take full responsibility for your success. And until you get to the point where you can say, no matter what happens, I can look myself in the mirror and say, no matter what, I got knocked down, I got up again. I got knocked down, I got up again. If you're constantly feeling like you're just going in circles, you got to evaluate whether trading's for you, because trading involves making a commitment to be good. It's a commitment to taking responsibility. That's really what it boils down to. Being a professional trader means you're running a business and you're going to be responsible for your results. And if you're making excuses, you have to reevaluate whether or not full-time trading is for you. Because as challenging as the market is, there's still opportunity. It's not like we haven't been moving up or down. Maybe it's a little bit more challenging in this in the last year or so. But you know what? I've made money. There's people that made money. And I'm not. You have to work on it. But I'm telling you, you kind of hit a hot button for me this morning. I don't like underachieving. It turns my stomach. There's no other way to say it. And the first thing I look for when somebody's talking to me about them not getting the results that they want, the first thing I'm going to pay attention to is whether or not they're blaming something outside of themselves or making an excuse for the lack of achieving what they want to achieve. You find out how bad you want something by your discipline. That there's no other way to put it, Pete. Peter. You're right. You find out how bad you want something by your discipline to take the right steps. If you don't have the discipline to discipline yourself, I'm telling you flat out, you don't want it bad enough. And I'm sorry if that's too bold or however you want it. It's the truth. Think about losing weight. If you really want to lose weight, which I'm trying to do for myself right now, you get to the point where you're like, I'm tired of wearing fat pants, or whatever. Going home as soon as you get home, you put on sweatpants, whatever it is for somebody. I'm just using myself as an example. You know what I'm saying? You get to the point where you're like, I have like this quote in my own head where I'm like, I've reached my fat weight. Where I'm quote unquote uncomfortable. You have to get to the point where you're uncomfortable where you're going to say, damn it, it doesn't matter that I'm 50. It doesn't matter that, whatever. Like Gordon, you just happen to type that in there. Until you get to that point where you're pissed off and angry about underachieving for whatever you're trying to achieve, whether it's losing weight, whether it's, whatever. It doesn't matter what it is. Until you get to the point where you're motivated enough to take the right action and stop making excuses, you're just going to be going in circles. And that's not even to say everybody needs to be a full-time professional trader. Maybe it's just the action during the day is a little bit too much for you and the time frame is wrong, which is why I spent so much time on talking about time frame. Look, the bottom line is we could talk this morning all about the technicals, but the bottom line is, and again, Mike, I've known you for a long time now. I could lean on you a little bit here. You typed in 2 days into the year, you broke your rules. We have to get to the point where you're literally cursing at yourself, and you're like, what am I doing? Stop, like that kind of. But that's my job. My job is here to, my job is here to do it too. That's what my job is as a mentor. If I'm going to do my mentoring correctly, I'm not just going to be like, hey, attaboy, you're great, Johnny. Even though you lost by 200 points, I'm going to give you a trophy anyway. That's not reality. It's just not reality. So I get like this because you have the talent. Not a question of whether everybody in this room has the talent to be successful at some level doing this, but you have to make a commitment to being successful. And you have to literally say to yourself, I am tired of Pete underachieving. I am tired of it. And what am I doing wrong that's not getting me closer to where I want to be? And catch yourself. Catch yourself making excuses and then get pissed off and you're like, you know what? That's BS. That's a bad excuse. That's taking that, which is also a reason why people don't write trading plans. And I'm going to tell you why. Because as long as they don't make a commitment to how they're choosing to be successful, then the market is still this big mysterious thing outside of them that is like mystical and like nobody can do, that kind of thing. I'm telling you, there's people doing it. But you got to make a commitment, make a decision on whether or not you're willing to discipline yourself to do what it takes. And you know what? If you don't like the word discipline, reword it. Call it doing the right thing. Calling it doing what you should when you should. Or do what I do. I've actually gotten to the point now where in various things in life, there's the big broad picture, the big broad objectives of where we want to be, and now I've gotten to the point where the secret to success is breaking everything down to simple steps. What are the steps I need to get to where I want to be? Everybody has this big, huge objective, and then it overwhelms them. But you know what? Break everything down. What is a great trade? How how do I call a great trade? What does a great trade look like? Well, first, a great idea. Okay, do I have a great idea? Step one. Well, assuming you have a great strategy you believe in, which, by the way, I sent an email to Singh this morning. If you guys could take a look at his posts, something very important that he's doing well in his blog post and his game planning is he's owning his ideas. He's making very, very detailed comments about why he wants to be long or short, which, Mike, you're doing a little bit of that as well. It's very important that you own your ideas so you trade them with conviction. So the steps of trading, you get to the point where you wipe out all the other superfluous stuff. And I know superfluous is a big word for 9 o'clock in the morning. Um, Good strategy, good game planning, good trade management, period. Break it down into simple steps. So now you're in the trade. What are you doing while you're in the trade? You're constantly talking to yourself. What do I do if it goes up? What do I do if it goes down? Period. And then take the steps that you said you were going to take. You have to constantly be doing that. So that's in your control. So Gordon, Mike, everybody, that's in your control. What can I control? What can I control after I get in the trade? How do I manage risk after I get in the trade? Those are all under your control, regardless of what happens in the market. The sooner you get to the point where you take control for everything, for what you can do something about, and completely admit you can't control what's going to happen in the market, you're completely free to just have flawless performance, because then you're admitting you can't control what's going to happen next other than what you can do. But you know what's so liberating about that? You are now 100% in control of your success. Not waiting for the market to give you a great bull market run or anything along those lines. You're in control. These are the circumstances I am planning and choosing to trade. And when you get closer to that, trading becomes a business you can run with conviction, because you are taking responsibility for your success. If you catch yourself personally making excuses, I'm telling you right now, yell at yourself. It's the only way to get to the next level when you are 100% responsible. I'll give you a good example of myself last night. I've been working out a lot lately. I'm feeling a little better. I actually kind of did my resolution 2 weeks ago, so I didn't feel like it was this big January resolution thing that everybody on the planet and everybody gives it up by like the second week in January. I started a little early to play a little mental game with myself. And then what's interesting is, like, I went out for a drink after work last night, and then I went home and I had this really good 3 week run of working out and eating right, and my whole refrigerator's filled with vegetables and grilled chicken. And then last night, like a dope, I go home after having a drink and I get a Big Mac with cheese. And and I'm like I'm eating it, and I'm like, what am I doing? So I finished it anyway, but then I'm like, all right, that was stupid. So first thing this morning, I got right back on track, and it's that getting back on track, first knowing what the right track is, and then getting right back on track and being okay with just, all right, that was not the brightest thing in the world. Let me get back to the road that I'm supposed to be on, and immediately make a course correction. But you have to know what the right course is and pay attention. All right, so that's enough for this morning's sermon. It's just like, there's just a hot button that gets pushed in me when I get a sense of somebody insinuating their success is outside of them, and that's just not the case for anybody. Success is your responsibility, and I'm going to tell you, there's no perfect time to start. There is no better time. There is no perfect time. Because 2 years from now, people that are starting right now, there's going to be a bunch of people that are going to be really successful. And if you're making excuses, you're going to look back and say, oh, they must have had something I didn't. And I'm going to tell you what they had that you didn't. They paid attention, and when they got knocked down, they got back up. And they constantly made a list of what didn't work and then did a lot more of what did work. But that means you personally have to make that list. All right? All right, so anyway, that's my Think and Grow Rich for this morning. Getting into today's ideas, let's see, we have a little bit bigger list here on the long side than the short side. We covered ExxonMobil and CVX. Both of them still very strong, but big topping tail in Exxon, and CVX came up to the resistance level. So both of those look like they have played themselves out to the upside in the short term. We'll see. DOW, very, very good breakout. Good example here as well of a 20-day breakout. It popped on good volume yesterday. I do like this as a long, but because it's the first time it pushed through what is basically a 3-month high, I would probably be leaning more a little bit towards buying a lower opening as opposed to being the first person on board the next time it makes a new high. I think that the risk management would be a little bit better there. We had a couple people type in Baidu. I think this is a downtrend changing into a potential change of trend to the upside. I think if you want to be long here, you don't have a lot of the higher time frames with you. As a matter of fact, if you drew a trend line from the end of October, getting long here would be getting right into that trend line as resistance. So I think if you're trading Baidu or looking to trade Baidu long today, you just keep in mind you don't have the higher time frames on your side there. LVS. LVS we actually had as a pretty decent sell short yesterday. We had the gap up, which we had a lot of gaps yesterday, which kind of messed with the opportunities after the open yesterday because we pushed up and then not a lot of stocks actually trended after that first half hour yesterday. I still prefer the stock on the short side. Hard to ignore a gap through the moving averages though, so I think I would tend to stay away from this myself. But if somebody said to me you have to trade LVS today, I think based on the last 2 months price action and making consistent lower highs, I would probably prefer to be short this stock, just based on the longer term time frames there. Let's see, APA. Pretty big gap, taking out a lot of price action from the most recent trading. It looks like it took out the last 3 weeks. That's actually pretty significant. But again, I'm going to go back to, let's say you're forced to trade something and it's your kids' graduation money or whatever it happens to be. Is that the best trade on the board? Is that really like you'd present this trade as a long to a group of other traders where you're responsible for their money? Dig in and ask yourself that question. Next we have Potash. Potash actually looks like it's rolled over from a downtrend to now we actually have a head and shoulders bottom there. If you can see that on the daily chart, it's actually pretty clean. With the neckline being at 44. So this is actually interesting. We have a couple of things unfolding here in pot. We have a catch play, good volume on the up days, and a change of trend, and a break of this 44 neckline on the head and shoulders bottom, all pointing towards wanting to be long above 44. So a lot of different reasons to want to be long this one compared to the other one that we looked at. Let's see. Next we have eBay. eBay, I'm going to say no. I think eBay is, and look, the bottom line, if you take the moving averages out of there, the stock is in a trading range. Let it get out of this trading range because there's no edge to being long or short here. Again, that's just my opinion, but I don't see a big edge there. Visa, we game plan for this every single day, and every day I'm going to keep saying the same thing. 1 or 2 days up, 3-week trading range. 1 or 2 days up, 3-week trading range. Absolutely a long. It's definitely the right side. Which actually, you know what? I want to mention this very briefly on something that Charles had mentioned this morning about a stock trading 2.5 million shares or whatever it was. Sometimes before you start to trade a stock, you have to watch the stock for a day or two to see how it actually trades. Like, does it trade a consistent 2 million shares during the day where it's actually tradable? Or more often than not, is there like this million share print in the morning and then the rest of the day it just drips? So knowing the stock a little bit outside of just the chart sometimes can give you a good heads up. GMCR is interesting. We talked about this yesterday, setting an alarm, and the alarm actually triggered at the high of the last 10 days. It's going to be interesting to see if we get above that level. I think I had the alarm set at 46.50, if I'm not mistaken. I forgot it triggered yesterday afternoon. So I'm still in breakout mode on this stock, but I'd like to see it break out and actually stay there. I'm not really in long or short mode here. When you get consolidation, you switch from being a trend to now looking at it as when this thing breaks out, I am hopping on for the ride. And I'm going to tell you right now, before it happens, the consolidation we're seeing in GMCR right now, this thing is going to explode or implode for at least a week. So we want to make sure that we're on this. The longer it consolidates and the tighter the trading range, the more likely the thing is going to make a massive move outside of this. Amazon we have as a long. I don't see Amazon as a long. Maybe you're looking for some follow-through momentum from yesterday's decent day. Uh, Possibly, I don't know, but you have some decent resistance to the left there. Um, if it's in your plan and you feel like you really want to be long, you're probably long on a much shorter time frame than the picture we're looking at there, because we've been talking about Amazon as being relative weak to the rest of the market for about 2 months now. So before me, again, me personally, if I was going to trade this long, I'd want to see a more clean reason to be long because of how weak it's been compared to the rest of the market. Google, we keep talking about. That's actually probably one of the stronger stocks around. Goldman Sachs, we came in yesterday as a sell short. Now it's right at resistance around 95. Again, I don't see a monster edge here. As a matter of fact, you could just see that we keep consolidating here again. If I had to be long or short, I would probably prefer to be short. Netflix. Netflix, not as consolidated as GMCR, but very similar. Very, very similar where we're kind of consolidating, and I think the odds of this having a significant move out of this consolidation are pretty good, and that's how I'd be looking at that one there as well. RIM, we still have, actually interesting here because we were looking at RIM as a short sale for a while there, and it was interesting because we said it's not a long, but the upside potential to further downside movement to earn money was significantly diminished, and we nailed that. We talked about that for a few weeks there, and then ultimately that gap down into earnings ended up being the low of that move so far. So not being short there was pretty good. Is it a long now? It's right at the trend line. Again, if you took the moving averages out of there, or if you use the moving averages, it's right at that trend line where you can start to make a little bit of an idea where you want to be long there. I'd like to wait a little bit longer, but I can definitely see why you would consider it. X, big gap up over the last few weeks. You know what? The chart itself is pretty neutral, but if you're just trading off of yesterday's price action, I think you can definitely justify wanting to be long there, just based on the gap and the fact that it took out the last 3 weeks. COF, I think it's the first day out of the gap there. I think that's a very neutral idea. COP, we discussed that sector before. 3M, nice gap. Topping tail, though. I think if you can bid at or near yesterday's lows on a pivot low, I think you're okay there, despite the topping tail. Topping tail clearly just took out the last 3 or 4 months, so that's pretty significant. But we did have a reversal, a topping tail, and big volume, so you got to be aware of that. So if you bid yesterday's low on a really clean pattern, and it holds, you're probably golden. If you bid yesterday's low on a clean pattern and it doesn't hold, just kick it out, because it's a good idea that just didn't follow through. So I think it's a good idea, just a question of whether or not it follows through or not. Let's see, last on the long side, we have VCO. I think this is okay. Again, if you just look at the last 3 months, can you definitely look at this and say buyers or sellers are in charge and I can absolutely hop on for the ride? I don't see that. Unless it was UCO. Maybe I wrote it down wrong. Maybe it was UCO. UCO looks better. Triple top up there. It gets above 44. If it looks like if it stays, I think it's okay. Walmart looks good over 60. Looks good over 60. This is very similar to what we were talking about in Visa, where it has the 1 or 2 days where you're like, wow, this stock looks good, and then it goes into a trading range for 3 weeks. Good technical setup, though. On the short side, we have COH. I like that. Good follow through there. Ralph Lauren, I like that as well. Like it better through that most recent support there, though. RRC is the one we discussed this morning. I like that one, too. CHKP. I like the downtrend. I haven't seen any reason to think it's a good long. So even with the market bouncing, the stock's weak. So it's showing good relative weakness to the market, so that's a pretty good idea there as well. KLAC, this is interesting. A couple of people wrote this in as a short. I actually have it as a long today, and I'll tell you why. It's one of the stronger stocks we've been looking at for the last few weeks and mostly for December, and we just had a decent 2 down days in the stock. So I am looking to buy a lower opening in the strong stock, not necessarily a saturation play, but what has been a strong stock that has now pulled back with two lower closes. So I'm looking at that from the perspective of, yeah, it did close below both moving averages yesterday, and maybe it's a potential change of trend. But I like it as one of the stronger stocks we've been looking at. And again, if it opens lower, finds a bid, I'll bid for it. If it doesn't, that's my plan. Next we have CRM. Very nice bear flag on the daily chart. I like that one. And it's staying below 100, which is, everybody knows that's a par is a pretty big number there. So I like that one. VMW, also a very good setup there. Good bear flag on the daily. KO, this is actually a trade that was put in there with a very detailed explanation of topping tails, sellers coming in, watching the stock intraday, and feeling confident that the sellers are coming in and they push the stock down, looking for that very specific scenario. And again, this is not a classic textbook sell short that you would teach your kids. So if this is your trade and you want to be short here, recognize it's not a sell short technically, but if you know the stock and you're watching it and you feel confident the sellers came in a big way yesterday because you were watching it, you detailed your scenario out. All right. Last but not least, GG and ABX. I like both of these as sell shorts. We just had a good 3-day run in stocks that were really weak. I think a test of yesterday's high in both of these stocks look pretty good. All right. So thank you for participating in this morning's sermon on what it takes to be successful and looking in the mirror. And we will see everybody in a bit.